Welcome back, everyone. We're joined now by John Byrne, a financial advisor with Edward Jones. Thank you so much for joining us today.
Thanks for having me.
And we're really excited to talk to you today about the big market sell-off we experienced a week ago. A lot of investors reacting to that sell-off as kind of negative news, but I want to talk to you first about volatility when it comes to the stock market, because that's a word that's been thrown around a lot in the last week. So can you kind of boil it down, and what is stock market volatility, and then how does it kind of work?
Yeah, I mean, volatility in a nutshell is just the up and down that you see every day in the news or online. It's like a yo-yo, and it's triggered by any number of things, news headlines or rumors going around or new economic data that's been released. But it's a pretty normal thing to have going on.
And in the case of last week, I know that we saw a pretty major sell-off, which is often referred to when, and if you can kind of validate this for me, right? But when a stock loses about 10% of its value, that's referred to as a correction, right?
Yeah. When an individual stock does, or broadly, if the S&P 500 loses 10% from a previous high, it's considered a correction. Yeah.
And how often does something like this happen?
I mean, historically, we average about 10% correction per year.
Okay.
We average about 5% pullbacks per year. Like I said, this kind of volatility is fairly normal.
Got it. And so a lot of people, when it happens every year, might be reacting because that's maybe 10% of what they have invested kind of gone in the blink of an eye. What's your advice for investors, especially right after a major sell-off or correction like this?
Yeah, I mean, it can be really scary because we work really hard for this money and we want it to be there. The best thing you can do is take a deep breath, take a beat. If you're working with an advisor, call them, see what kind of insight you can get there. But broadly, stay the course to your long-term goals. I mean, if it's retirement money we're talking about and you're not retiring in the next year, maybe put some more in, right? It's buy low. It's not a bad idea there. Use the volatility as an opportunity to reassess what your strategies are, how your money is allocated, how your investments are allocated, and maybe take advantage of those lower prices.
Right, and already in the last week we've heard a lot of rebounding, right?
Yeah.
A lot of stocks kind of gaining traction. Is that usually the case after a major correction like this, that you see maybe some of your better days after one of your worst days?
Yeah, and the opportunity cost of missing those best days is pretty high historically. And so not panicking and staying invested is ultimately the most important thing. And like you said, last week we actually ended up flat on the week despite a 3% drop on Monday. And today we closed about flat too.
And if you mentioned talking with a financial advisor, if people are looking for advisement, where can they get in touch with you?
Well, they can find me right here in beautiful Bangor, over on Union Street. I run the Edward Jones office there.
All right, thanks so much, John. We appreciate your time today.
Thank you. Thanks for having me.
All right, and stay tuned. Your full extended forecast is coming right up next.